Hi guys, my name's Trevor, and I thought I'll just share with you something that I've been doing over the last year or two, and have been quite successful. Now, what it's about is basically everyone knows about forex, everyone knows about trading forex, but what a lot of people don't know is that you get what they call a forex PAM. So what I'm going to do is show you some key steps on how to find a forex PAM and get yourself started, and a few things about it. Okay, great. So let's start. So why join a PAM? The answer is simple. Make a positive return on one's investment, as we all do. If you don't have time to trade yourself, so you can get someone to trade for you, and if you're not very good at trading, this is a great way to make the kind of returns that forex traders do make without having to trade yourself. And as well, you make money while you sleep. You build your investment over time and grow. So what is your reason? Why do you want to make some money and not short-term, long-term profits where just over months and months and years just grow and make it look good? Okay, let's start. So what is a forex PAM? Okay, so that's the definition from Wikipedia, but basically in a nutshell, it's a hedge fund. So basically it's a fund that a professional forex trader would run. People invest in the fund, and then they get a share of the profit according to how much they invested in. And then the forex trader gets also a percentage of the profit as well for doing the hard work. So it's a win-win situation. So he gets commission, you get profit, you don't do anything as well. Okay, great. So let's dive into it and have a look for some more information. Okay, so this is always amazing. Albert Einstein, as everyone knows who he is, he said that compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Compound interest is the most powerful force in the universe. Okay, so how can that work to your advantage? Okay, so basically there's a link to a website. There's probably a few that you just simply Google will find it, but that's where I got this from. So if I look to an example and I say, okay, starting balance of $1,000 or whatever you want to or can afford, whether it's 50 to 1,000 to 10,000 or whatever, that's up to you. If you at 10% a month over 36 months, that gives you almost $30,000 profit, and that's just putting $1,000 in and then over 36 months letting it build. Okay, so it won't always be 10% a month. We'll go into risks and different things to look out for. Some months, yeah, I've had some great months where I made about 16%. Some months about 2.5 to 5, and I'm happy with that. It grows over time and evens itself out. The most important thing is to minimize risk and protect your capital. So what we can do, let's show you a few other examples. Okay, so let's go at 7% a month, and that is $11,000 over 36 months. Now, if you are putting money into the account every month, it is going to grow a lot faster because that it gets compounded and your profit gets compounded and everything like that gets compounded all the time. I mean, if you go to, let's say, 48 months, it is crazy. It's $25,000 from $1,000. It's 7%. If you put 10,000 in, there you go, $257,000 after 48 months. it just grows, and it grows and grows and grows. So you see it, first month, second month, and it just keeps growing and growing and growing, and then it's like 10% of that, and so forth, and just goes. If you're looking at more conservative, they say 5%. Still, after 48 months, it's still $104,000 potentially that you can make. Now, we'll go through risks and have a look at that possible, but I'm just showing you what can be done, and it really is. Okay, so let's go to our next slide. Okay, so like I said, here's some examples from my trading account, which I'll show you. And these things are possible. I mean, there we go. There's 1 month, and that was from the 11th month. Made 18.47% gains that month on one of the PAMs I'm in. And then look at the annual returns, 193% for that particular PAM for a year. That is more than any bank offers you. And yeah, so it really can be a really good investment. It can be a risk investment, but I will go through that as well. Okay, so let's go next. So how do you start? Okay, first you're going to sign up with a respectable broker. I'll give you a link to the broker that I use. There's lots of them out there. Some of them are risky, so do your research and do your homework. You fund an account, find a PAM, first test your due diligence, look at the history, and I'll show you a few things that you need to do. And maybe put a little bit of cash in and just have a look at the track record. Okay, so let's go to some more information. Okay, so how do you minimize losses and maximize gains? Simple, set a stop loss or capital protection limit. So basically what that is when you invest into a PAM, let's say I put in $10,000 or $1,000 or $100. I set my stop loss to, depending on the PAM, but roughly, let's say 5% or even 10%. So if at any time the losses go below that amount, your money gets taken out of that PAM automatically and put into your account where it's safe, where the trader cannot trade it anymore, and your thing is safe. But saying that, also you got to look at the risk. If the PAM has a lot of risk and a lot of float, if it closes a big trade, it could trigger your stop losses. So you got to make sure that they are set accordingly. Check your PAM history. See how long over the last year or two has he been a consistent month after month making profit. Though, I mean, they always say that your past history isn't always an indicator of future history. But yeah, but it is a good indicator on possibility. And that's where the next thing comes in. Always check your PAM's risk float, which basically is how much of a percentage of profit or loss does the PAM current or the trader currently have in open trades. So some of the PAMs, like this one PAM, I mean, there's about 300,000 US dollars traded at the moment in that PAM, which I'm in. Basically, his float is almost nothing. I mean, at times it's zero, sometimes it's positive. The worst it's probably been, I've noticed, is maybe $10,000 of 3,000 US dollars, which is what, 1% of that thing. So that's great. That is a PAM that's basically, this guy knows what he's doing. He's got very good risk money management. He doesn't risk a lot of money, and that's a sign of someone that knows what they're doing. So yeah, that's a good one to be in. And also check the total capital in the PAM as well as how many investors are in. I mean, looking at that one, is at $300,000. So you know, like, hey, this guy knows what he's doing. You got all your indicators. Basically, you got a good history. You got his float looks good, and there's quite a healthy balance in there. So yeah, so that is quite good. Okay, so what do I mean by that? So let's go have a look. Okay, guys. Okay, so let me just. Okay, so gone into my account. So let's have a look here. So we're gonna go and look at this strategy. I've blocked the names for now, so people don't just go in. Okay, cool. So once you sign up and get some information, I don't mind sharing which currently one's in, and at the later stage they might not be profitable and I might not invest in it. So always check where it is and keep on checking at least once a day, even twice a week at minimum. Okay, so there we go. So now we have a look at this one. So basically he's got a healthy balance. His open profit and loss is $195. That means of all the trades that is currently in the market, these are trades that haven't closed, is $195 in negative. So if something happens and all of a sudden all the trades close, that's a loss. And that loss will be distributed among investors and according to how much you actually have invested in that PAM. But as we can see, there's 24 investors and all the investment totals to $306,000. Okay, so let's look at the performance. This month, it's great, 24% gains. As you can see, sometimes it is a bit choppy, up and down and whatever the case is. But with someone that is pretty good, that's fine. So basically sometimes it might be down and then goes up and jumps up and down. So that's all up to you, depending on the risk profile and stuff you want. If we look at the year to date, okay, this is done 46, but remember this is not a full year. It's only started in roughly August. So this guy's only been trading since August, so it's not a full year yet. And that's pretty good. So that's like 3-4 months and you get 50% gains. Okay. In the about section, he basically takes 30% cut. So basically, for that month with 24%, he'll take 30% of that for his trading fees, which is fair. He's doing all the hard work. He's making the money. You don't have to do anything. You just invest in it. Okay, so here's also your stop loss. So basically, like I said, and here's the maximum drawdown is 7%. So, I mean, for this one, I got my stop loss is 10%. So for $10,000, 10% is $9,000. So I set my stop loss to 10% of 9,000. But when that as you it improves or increases, I raise my stop loss. So when it's 1,000, I make it 900. When it's 1,500, I set mine to 1,213. So I keep on increasing the stop loss, so that you keep on locking in those profits. So if it does go down or goes past the 10%, it automatically pulls it out. You don't go all the way down to whatever it is. Okay, which is great. Okay, so we've got another one that I'm invested in. Okay, this one is currently a bit risky at the moment. I've been watching this every day, and the open P&L is basically managed. So basically it's improving, going down, but I'm keeping a close eye on it. It's got a balance of about $40,000, which is still pretty good. You basically got a risk of 18. So if everything closes instantly, that is going to go through your stop loss, and then you're going to get the rest of it back. So It's a little bit risky at the moment, and I'm closely thinking of withdrawing, but I'm just watching it closely every day to make sure, and watching his open P&L improve and get better, so we can see. But if you look at the performance, this month basically that's done about 7%, which is still really good and healthy. I mean, the other one, that's for a freak, some months would be great, but there's a lot of them that will be like 20% or 15%, but this open PL just gets bigger and bigger until it basically matches the balance, and all of a sudden the whole account is PAMM is closed, and you risk losing your funds that you invested in. So guys, just keep a close eye on that. Okay, so if we look at the trade history, you can see different trades he executed and how much profit or loss each one is. Statistics, this guy's max drawdown is about 3.5%, which is still pretty healthy. The returns is 196% for the year. So if we go look at the year, 196%, which is great. He takes 30% of that, which is fair, and you get the rest. Brilliant. How great is that? Yeah. So that is some pretty simple and interesting things to know. Okay, so let's go back to this. Okay, cool. So you go over this again, set your stop loss, check your PAMMs history, check your PAMMs risk of float, check the total capital of the PAMM as well as how many investors. Okay, so there. Ways to minimize risks: set up stop losses, diversify funds in multiple PAMMs. Basically, 2 PAMMs. That one is a bit risky, so I'm not going to put everything in there. I'm going to split them up. I might even take half of my capital out there to protect it. Sometimes having the capital just in your account and not investing in a PAMM is a good thing, because if the market gets toppy, I'll rather protect my capital than risk losing it. And that's something I've learned the hard way. I've got into a few PAMMs, not looking when I first started out. I was doing about 25% a month, and then I was like, oh, this guy's great. So I put some money in, and the next morning, hey, half of it was lost because I didn't check how much I was risking. He had some trades going that were massive, and he was just running those trades open. He didn't close and let them run until loss, and eventually that PAMM got closed. So guys, keep on checking it. Like I said, if the float gets too high, withdraw your funds or reduce your position size. Having a look and saying, okay, cool, how much gains did you make anything yesterday? What is the float sitting at? Is that still healthy? And then I'll say, okay, cool, everything is good, so follows my rules, and then I'll leave it and I'll close it. The next day I don't worry about it. The next day I'll go in, I'll check, I'll spend like 2 minutes checking, and then I'm like, okay, great. The float looks good, everything's good. Sometimes you log in and you see, okay, it's gone down about 3%. That's fine. His float looks good, everything's good. He hasn't hit your stop loss. Leave it. Next day you walk in and you'll see that gains back again, because it will jump up and down. Okay, so well, that's good information. At the end of the video, I'll put a link to the broker I use. So if you like, you can sign up an account, fund it, and you're welcome to leave a comment or send me a message on Facebook on the